Florida was supposed to be the place people move to, not the place they escape from. For decades, it was the American dream wrapped in sunshine. No income tax, warm winters, and miles of coastline that looked like paradise from every postcard. But in 2025, something shocking is happening. People aren't just leaving Florida, they're fleeing. In the past 12 to 18 months, analysts estimate that up to 1 million residents will pack up and leave the state between 2024 and 2026. Not because they want to, but because many feel they have no choice. This isn't a rumor. This isn't sensationalism. This is a structural unraveling of Florida's affordability, stability, and future. Families earning six figures can't afford insurance. Retirees are abandoning homes they thought would be their forever place. Entire coastal cities, from Miami to Cape Coral to Tampa, are showing textbook crash patterns, plunging prices, exploding inventory, delistings, and investor panic, as seen in multiple housing crash reports from 2025. Today, we break down the real reasons behind the Florida exodus, and why 2025 may be the year the Sunshine State loses its shine. Number 10. The insurance apocalypse. Picture a family opening their annual insurance renewal. The envelope they once barely noticed now triggers immediate panic. What cost $2,800 in 2019 now demands $11,500, and insurance companies deliver the news with brutal efficiency. Pay up or lose coverage. Across Florida, this scene repeats in millions of homes, and it's driving the first wave of exodus as middle-class families recognize they can't afford to stay. Here's the devastating reality behind those renewal notices. Florida homeowners' insurance rates have exploded 102% since 2020, the fastest increase in the nation. The average annual premium hit $6,000 in 2024, but that statewide average masks catastrophic regional spikes. Coastal properties face $10,000 to $15,000 annual premiums. Homes near hurricane evacuation zones pay $12,000 to $18,000. Properties with older roofs or within HOA communities that experienced claims get quoted $20,000 plus or flatly denied coverage. For a teacher earning $51,000, married to a nurse making $68,000, $119,000 combined household income, that $13,500 annual insurance bill consumes 11.3% of gross income before mortgage payments, property taxes, or HOA fees even begin. They're hemorrhaging $1,125 monthly just for insurance on a home that's lost equity every month for the past year. The insurance company exodus accelerates the crisis. 12 major insurers fled Florida entirely between 2022 and 2024, leaving Citizens Property Insurance, the state-backed insurer of last resort, holding $17 billion in exposure with only $6 billion in reserves. When the next major hurricane hits, Citizens faces insolvency, and policyholders discover the insurance they paid for can't actually cover their claims. Families face impossible choices. A Coral Springs couple making $135,000 combined received a renewal notice demanding $14,800 annually, up from $4,200 just 3 years earlier. They can't refinance because they're underwater. They can't sell without catastrophic losses. They can't afford to stay with insurance consuming 11% of gross income. They joined the exodus, listing their home, accepting a $62,000 loss, and relocating to North Carolina, where comparable insurance costs $1,900 annually. The psychology has shifted completely. Wealthy retirees who maintained Florida winter homes for decades now calculate the mathematics. $15,000 annual insurance plus $8,500 property taxes plus $6,000 HOA fees equals $29,500 yearly just in carrying costs for a home occupied 3 months annually. Luxury vacation rentals in Arizona cost less with zero maintenance headaches and $2,200 annual insurance. Insurance isn't just expensive, it's the primary driver forcing families to abandon Florida permanently. Number 9. The Condo Crisis Catastrophe. Gleaming high-rise towers line Miami's Brickell Corridor and Fort Lauderdale's beaches, symbols of Florida luxury living that attracted retirees, investors, and young professionals believing condo ownership meant carefree lifestyle. Behind those glass facades, a financial catastrophe is unfolding that's forcing mass exodus as owners discover their investment has transformed into a monthly cash drain with no escape. The numbers tell a devastating story. Condo prices are falling in 92% of Florida markets, and it gets exponentially worse when you examine luxury coastal segments. Naples, luxury beachfront condos crashed 29.6% year over year to $950,000, down from $1.35 million just 12 months earlier. Miami Beach condos in premium buildings dropped 15 to 22%, while new construction floods the market with inventory nobody wants. Tampa condo values declined 8.4% year over year, and the correction accelerates monthly as forced sales multiply. But price decline is just the visible disaster. The real catastrophe hiding beneath those falling values comes from Florida's new condo reserve requirements following the Surfside collapse. Buildings constructed before 2000, the majority of Florida's condo stock, now face mandatory structural inspections and fully funded reserve accounts for repairs. Owners in aging towers receive special assessment notices demanding $40,000, $75,000, even $120,000 plus immediately to cover repairs, roof replacements, concrete restoration, and elevator modernization. Here's what that means for real families. A Fort Lauderdale retiree purchased a beachfront condo in 2019 for $485,000, believing it meant financial security. In 2024, she received a special assessment for $68,000, due in 18 months, while her condo's value dropped to $398,000. She's $155,000 underwater, negative equity plus the assessment, with no ability to refinance, no cash to pay the assessment, and no buyers willing to assume the financial catastrophe. She's trapped, and she's not alone. The monthly cost explosion compounds the crisis. Average condo HOA fees in Florida hit $550 monthly statewide, but coastal communities face $800 to $1,200 plus monthly. Insurance premiums for condo buildings have quadrupled, and those costs get passed directly to owners through skyrocketing HOA fees. A Naples condo owner who paid $625 monthly HOA fees in 2021 now faces $1,485 monthly, an increase of $860 monthly, or $10,320 annually. Condo owners face the perfect financial storm: falling values, massive special assessments, exploding HOA fees, and no exit strategy. They can't sell without catastrophic losses. They can't afford to stay with costs spiraling monthly. They can't refinance while underwater. The result? Mass exodus. Condo owners dump properties at any price, flooding the market with desperate inventory that drives values lower, creating a downward spiral that devastates everyone still trapped inside Florida's condo nightmare. Number 8. The property tax explosion. Florida marketed itself as a low-tax paradise. No state income tax became the rallying cry that lured millions from high-tax states believing they'd finally escape government taking their paychecks. Behind that marketing promise, property taxes are exploding across Florida as local governments desperately scramble for revenue while facing hurricane recovery costs, infrastructure failures, and budget shortfalls that can't be filled any other way. The brutal reality families discover: Florida's effective property tax rate sits at 0.80%, but that statewide average hides catastrophic local spikes. Miami-Dade County residents face effective rates of 0.98%. Broward County hits 1.02%. Palm Beach County reaches 1.04%. For a family with a $425,000 home in West Palm Beach, that translates to $4,420 annual property taxes, and it's climbing 8 to 12% annually as local governments raise millage rates to fund hurricane recovery, rising insurance costs for public buildings, and infrastructure repairs. Here's where it gets truly devastating. Florida's Save Our Homes Amendment caps property tax increases at 3% annually for homesteaded properties, but that protection evaporates the moment you sell. New buyers pay property taxes based on current market value with no cap protection for years. A Tampa family buying a $410,000 home in 2024 faces $3,690 annual property taxes immediately, and that bill increases 8 to 10% annually as the county raises rates to cover budget gaps. The compounding effect crushes family budgets. A Jacksonville couple earning $95,000 combined purchased their $315,000 home in 2022 when property taxes totaled $2,520 annually. By 2025, that tax bill hit $3,150, a 25% increase in just 3 years. Combined with insurance doubling and HOA fees climbing 32%, their total monthly housing cost increased from $2,480 to $3,840, while their home value dropped 4.2%. They're paying $1,360 more monthly to own an asset worth less than they paid, and their income hasn't increased enough to absorb the shock. Local governments face impossible choices: raise property taxes or cut essential services. They choose taxes every time, and homeowners absorb the increases month after month until the math breaks completely. Florida's no income tax promise becomes hollow when property taxes, insurance, and HOA fees combine to extract 40 to 50% of middle-class household income. Families recognize the con and join the exodus, seeking states where total tax burden doesn't destroy financial stability. Number 7, the HOA fee crisis. Manicured lawns, sparkling community pools, and gated security sold Florida HOA living as premium lifestyle at reasonable cost. Behind those amenity promises, HOA fees are exploding across Florida as communities face insurance increases, deferred maintenance catching up, and reserve requirements that force monthly fees to double or triple within years. And homeowners discover they have zero control over costs spiraling beyond affordability. The numbers reveal systematic devastation. Florida HOA fees increased 43% between 2020 and 2024, with the average monthly fee climbing from $350 to $501 statewide. But those averages mask regional catastrophes. South Florida communities face $650 to $900 monthly. Luxury developments in Naples and Sarasota hit $1,000 to $1,500 monthly. Waterfront communities with marina access reach $1,800 to $2,400 monthly. Here's what destroys family budgets. A Fort Myers couple purchased their $368,000 home in a gated community in 2021 with $425 monthly HOA fees. By 2025, those fees hit $782 monthly, an 84% increase driven by the HOA's insurance jumping from $340,000 annually to $890,000 annually for the community's master policy. The couple now pays $9,384 annually in HOA fees alone, 2.5% of their home's current value vanishing yearly just for HOA fees before mortgage, insurance, property taxes, or utilities even begin. The special assessment nightmare compounds the crisis. HOA communities face mandatory reserve requirements for roof replacements, road resurfacing, pool renovations, and clubhouse repairs. Communities that deferred maintenance for decades now hit owners with $8,000, $15,000, even $25,000 plus special assessments simultaneously, while monthly fees explode. A Boca Raton homeowner received a $22,000 special assessment for community roof replacement, while monthly HOA fees jumped from $540 to $895, an instant financial catastrophe with no warning. Homeowners have zero control. HOA boards raise fees at will, levy special assessments without owner approval, and enforce payment through liens that can force foreclosure if owners can't pay. Families discover they're financially enslaved to boards making decisions that destroy affordability with no recourse. The exodus accelerates as families recognize HOA communities mean surrendering financial control while costs spiral. They flee to states where HOA fees stay reasonable or to non-HOA properties where they control their own financial destiny instead of watching HOA boards devastate their budgets monthly. Number 6. The affordability collapse. Florida promised middle-class prosperity. Affordable homes where teachers, nurses, police officers, and firefighters could build wealth while enjoying year-round sunshine. That promise has shattered completely in 2025, replaced by an affordability crisis so severe that essential workers can't afford to live in the communities they serve. And middle-class families earning 6 figures discover Florida has become financially impossible. Here's the brutal math that's driving exodus. The median Florida home price sits at $408,400, requiring monthly payments of $2,912 at current 7.1% mortgage rates before insurance, taxes, and HOA fees even begin. Add $6,000 annual insurance, $500 monthly, $3,500 annual property taxes, $292 monthly, and $501 average HOA fees, and total monthly housing hits $4,205. That requires annual household income of $168,200 to stay within the 30% affordability threshold. Yet Florida's median household income sits at just $67,000. The disconnect destroys families. A Tampa teacher earning $51,000, married to a nurse making $68,000, $119,000 combined, should represent stable middle-class security. Instead, they discover that Florida's median-priced home demands $4,205 monthly, consuming 42% of their gross monthly income. They're financially devastated before groceries, childcare, transportation, student loans, or emergency savings even begin. The essential worker crisis exposes Florida's broken model. Orlando employs 100,000 theme park workers, restaurant staff, and hospitality professionals at median wages around $42,000 to $48,000. These workers built Orlando's economy. They serve tourists, run attractions, manage hotels, yet they can't afford to live anywhere near their employment. A Disney World employee earning $45,000 annually needs a second income of $75,000 plus just to afford Orlando's median home. That's not housing, it's economic exclusion. First-time buyers face complete lockout. The typical entry-level home in Florida now costs $340,000 to $380,000, requiring $68,000 to $76,000 in down payment for 20% down, plus closing costs of $8,000 to $10,000. A young couple earning $85,000 combined would need to save $80,000 while spending 45% of gross income on current rent. Mathematically impossible for most. The dream of homeownership has died for an entire generation of Florida workers. The wealth transfer accelerates inequality. Middle-class families who bought before 2020 watch their neighborhoods transform into investor playgrounds as cash buyers from California, New York, and foreign countries purchase homes outright, pricing out local workers permanently. A Jupiter teacher watches her school's neighborhood fill with luxury vehicles and vacation homeowners while her colleagues commute 45 minutes because they can't afford to live near their classrooms. Florida's affordability collapse isn't temporary, it's structural. Insurance, property taxes, and HOA fees will never return to 2019 levels. Home prices may correct, but costs keep rising. Middle-class prosperity in Florida has ended, and families recognize it. They're leaving for states where $120,000 household income still means stability instead of financial panic. Number 5. The climate reality. The hurricanes always existed. Florida accepted that reality as the price of paradise. But in 2025, something has changed. The storms hit harder, arrive more frequently, and create financial devastation that insurance can't cover and families can't absorb. Behind the FEMA aid and rebuilding promises, climate reality is forcing a reckoning that's driving mass exodus as families recognize Florida's hurricane risk has transformed from manageable inconvenience to existential financial threat. Hurricane Ian's September 2022 impact still reverberates through Southwest Florida's housing markets. The storm caused $113 billion in damage, destroyed 5,000-plus homes completely, and damaged 80,000-plus homes severely enough to trigger insurance claims that are still being litigated in 2025. Fort Myers Beach, Naples, Punta Gorda, these communities rebuilt, but the psychological and financial scars remain. Insurance companies use Ian as justification to quintuple premiums or abandon Florida markets entirely. Here's what families discover about climate reality. You can rebuild a house, but you can't recover financially from repeated climate disasters. A Cape Coral family whose home flooded in Hurricane Ian spent $85,000 in repairs. Insurance covered $62,000, leaving them $23,000 out of pocket. Their home lost $48,000 in value post-storm. Their insurance renewal jumped from $4,200 to $12,800 annually. They're $71,000 poorer, paying triple the insurance, and facing the next hurricane season, knowing another storm means complete financial ruin. The flood insurance nightmare compounds the crisis. Properties in flood zones face mandatory flood insurance requirements averaging $2,400 to $4,500 annually on top of homeowners' insurance. Coastal properties need both wind coverage and flood coverage, creating combined annual costs of $15,000 to $22,000 just for insurance. A Clearwater Beach homeowner pays $18,400 annually for combined coverage on a home that's declining in value monthly. That's economic insanity. The infrastructure vulnerability accelerates exodus. Florida's electrical grid fails during every major storm, leaving communities without power for days or weeks. Water systems contaminate, roads flood, bridges close. The state's infrastructure can't handle current climate reality, and there's no funding or political will to invest the hundreds of billions required to upgrade systems for worsening storms. Families watch weather forecasts with existential dread. Every tropical system forming in the Atlantic triggers panic. Not about property damage, but about financial survival. Insurance deductibles of $25,000 to $50,000 mean most storm damage comes entirely out of pocket. FEMA aid covers tiny fractions of actual losses. Families recognize they're gambling with financial ruin every hurricane season. The exodus includes wealthy retirees who can afford losses but choose not to. They're relocating to Arizona, South Carolina, Tennessee, states where climate risk doesn't threaten complete financial devastation annually. Number 4. The remote work reversal. The pandemic transformed Florida into remote worker paradise. Tech professionals, finance workers, and digital nomads fled San Francisco, New York, and Seattle for Tampa, Miami, and Jacksonville, believing permanent remote work meant living anywhere while earning coastal salaries. That migration wave fueled Florida's housing boom, drove bidding wars, and created the illusion of endless demand. In 2025, the reversal is devastating Florida's housing market as companies mandate office returns and remote workers discover their Florida gamble has trapped them in negative equity thousands of miles from their careers. Here's the brutal pattern playing out. Amazon, Google, Meta, Apple, tech giants that enabled remote work in 2020 to 2022 now demand 3 to 5 days weekly office attendance. Remote workers who bought Tampa homes at $470,000 in 2022 now face impossible choices. Relocate back to Seattle and sell at $385,000, losing $85,000 plus closing costs. Or refuse office return and lose their $180,000 salaries. Most choose careers over homes, flooding the market with desperate inventory that accelerates price declines. The software engineer exodus accelerates Tampa, Jacksonville, and Orlando corrections. A Seattle-based engineer bought a Tampa home in March 2022 for $455,000, believing permanent remote work was guaranteed. In January 2025, his company mandated office return. His Tampa home now values at $392,000. He's $63,000 underwater before accounting for closing costs. He lists anyway, accepts $378,000 in March, and loses $77,000 total just to relocate for his career. His story repeats across thousands of remote workers simultaneously. The wealth destruction is staggering. Finance professionals who fled Manhattan for Miami penthouses face similar mandates. A J.P. Morgan analyst bought a Brickell condo for $680,000 in 2021. The company mandated office return in 2024. Her condo now values at $595,000. She's $85,000 underwater, paying $3,100 monthly, including insurance and HOA fees, while facing losing a $240,000 salary if she refuses to return. She sells, absorbs the catastrophic loss, and returns to renting in New York. The Florida job market can't absorb thousands of displaced tech and finance professionals. Local salaries run 40 to 60% below coastal rates. A software engineer earning $180,000 remotely for a San Francisco company discovers Tampa tech jobs pay $95,000 to $120,000. The pay cut plus housing losses equals financial devastation. Florida's remote worker boom wasn't built on fundamentals. It was built on temporary pandemic policies. Those policies reversed, and the exodus has begun. Number 3. The investor exodus. Real estate investors fueled a massive portion of Florida's boom. Individual landlords, Airbnb operators, institutional buyers, and foreign capital flooded the market believing Florida real estate meant guaranteed returns. They bought thousands of properties during 2020 to 2023. Driving bidding wars that priced out local families and inflated values beyond sustainability. In 2025, those investors are dumping properties simultaneously as the math collapses, and their exodus is flooding the market with inventory that accelerates price declines while crushing anyone still trapped holding Florida real estate. Here's what's destroying investor returns. Short-term rental occupancy has crashed across Florida as Americans tighten vacation budgets during economic uncertainty. An Orlando Airbnb operator who bought 3 properties in 2021 to 2022 betting on Disney tourism now faces occupancy rates down 40% year over year. Properties that generated $3,200 monthly net income in 2022 now lose $850 monthly after mortgage, insurance, property taxes, HOA fees, and maintenance. He's hemorrhaging $30,600 annually across 3 properties with no improvement in sight. He's dumping all 3 simultaneously, accepting losses to stop the financial bleeding. The institutional investor retreat signals systemic problems. Invitation homes, American Homes, For Rent, and other institutional landlords accumulated thousands of Florida properties during the boom. They're now selling strategically, recognizing that Florida's insurance crisis and climate risk create unacceptable long-term exposure. When sophisticated institutional money exits, it signals fundamental problems beyond typical market cycles. Long-term rental math has collapsed too. An investor who bought a Jacksonville property for $285,000 in 2022, expecting $2,100 monthly rent, now faces reality. Insurance jumped from $2,400 to $7,200 annually. Property taxes increased 22%, and maintenance costs exploded. Rental income doesn't cover ownership costs anymore. The property loses $380 monthly. Multiply that across a portfolio of 8 to 12 properties, and investors face losses of $45,000 plus annually. They're selling at whatever price generates offers. The foreclosure wave accelerates the exodus. Investors who bought with minimal down payments and interest-only loans now face properties worth less than the mortgage balance while generating negative cash flow. They strategically default, walking away from properties and letting banks absorb the losses. Those foreclosed properties flood the market as bank-owned inventory priced to sell immediately, driving comparable values lower throughout neighborhoods. Foreign investor retreat compounds the crisis. Canadian, European, and South American buyers who maintained Florida vacation properties for decades now calculate the mathematics. $15,000 annual insurance plus $8,000 property taxes plus $6,000 HOA fees equals $29,000 yearly for a home occupied 1 month annually. They're selling and redirecting capital to markets with rational insurance costs. The investor exodus creates a vicious cycle. More supply, fewer buyers, lower prices, more distress, accelerating exodus. Florida's housing market is experiencing the unwinding of a speculation bubble, and there's no bottom in sight. Number 2, the employment exodus. Florida's economy promised opportunity, booming growth, new corporate relocations, and endless job creation that would sustain housing demand forever. Behind that promise, Florida's employment reality is exposing deep structural weaknesses that are forcing families to leave not because they want to, but because staying means accepting wages that can't support the cost of living. The employment exodus is accelerating as professionals discover Florida's job market can't deliver the incomes required to survive Florida's costs. Here's the devastating disconnect. Florida created 242,000 jobs in 2023 to 2024, and the headlines celebrated job growth as proof of economic strength. But examine what jobs Florida creates. Hospitality at $38,000 annually, retail at $32,000, food service at $28,000, theme park operations at $42,000. These aren't careers that support $408,400 median home prices, requiring $168,000 plus household incomes for affordability. The professional wage gap crushes families. A marketing manager in Miami earns $68,000. That same role pays $95,000 in Atlanta, $110,000 in Dallas, $125,000 in Denver. A software engineer in Tampa makes $95,000. Identical roles pay $140,000 in Austin, $165,000 in Seattle, $190,000 in San Francisco. Florida's wage structure trails national averages by 20 to 35% across professional categories, yet Florida's housing costs exceed most comparison markets. Teachers face catastrophic financial reality. Florida teacher salaries average $51,000 annually, 47th in the nation. A teacher with a master's degree and 12 years experience earns $54,000 teaching in Jacksonville. That same teacher would earn $78,000 in North Carolina, $82,000 in Virginia, $94,000 in Massachusetts. Their They're leaving Florida for states that compensate educators fairly, creating a teacher shortage that threatens Florida's entire public education system. Nurses experience identical patterns. Florida RNs earn median salaries of $68,000 annually, travel to North Carolina and earn $76,000, move to Colorado and earn $84,000, relocate to California and earn $115,000. Florida hospitals face nursing shortages as professionals flee for states offering 20 to 40% higher salaries, while housing costs less. The corporate relocation disappointment accelerates exodus. Companies announced Florida relocations with fanfare. New offices in Tampa, Miami, Jacksonville. Then employees discovered Florida salaries come with 15 to 25% pay cuts compared to their previous markets, while housing costs equal or exceed what they left behind. They're demanding transfers back to higher-paying markets or leaving for new employers entirely. Florida's employment crisis is simple. The state's economy creates low-wage service jobs while requiring six-figure household incomes for housing affordability. That math doesn't work, and families recognize it. They're leaving for states where wages align with housing costs and middle-class prosperity remains achievable. Number 1. The equity trap. The ultimate driver forcing Florida exodus isn't any single cost. It's the devastating realization that homeowners are trapped in negative equity while watching their wealth evaporate monthly. Families who believed homeownership built generational wealth now discover they're hemorrhaging money every month, owning assets declining in value. And the only escape requires accepting catastrophic losses that will take decades to recover from financially. The equity trap is the final reason nearly 1 million people are fleeing Florida in 2025, because staying means watching their life savings vanish while costs rise forever. Here's what the equity trap looks like for real families. A Fort Myers couple purchased their home in April 2022 for $385,000 with $77,000 down. Their entire life savings accumulated over 12 years. By January 2025, Cape Coral Fort Myers median prices dropped 9.6% to $375,000. Their home now values at $348,000. They're $37,000 underwater on the mortgage alone, meaning they've lost 100% of their $77,000 down payment, plus an additional $37,000 they don't have. But the equity devastation goes deeper. They've paid $64,800 in mortgage interest over 33 months, money that's gone forever. Insurance cost $29,400 for those 3 years. Property taxes totaled $11,200. HOA fees consumed $18,900. That's $124,300 spent with zero equity to show for it. They've lost their entire $77,000 down payment, plus spent $124,300 maintaining an asset now worth $37,000 less than they owe. The monthly cash flow trap compounds the crisis. Their current monthly housing cost hit $4,380, mortgage $2,510, insurance $1,150, taxes $315, HOA $405. They gross $7,250 monthly combined income. Housing consumes 60.4% of gross income, leaving $2,870 monthly for groceries, childcare, transportation, utilities, student loans, healthcare, and any emergency. They're financially drowning, have lost every dollar of savings, and face years more of wealth destruction if they stay. Selling means accepting catastrophic losses. They'd need $26,100 for realtor commissions, 6%, $3,500 closing costs, and they're $37,000 underwater. Total loss to escape, $66,600. They don't have it. They're trapped, can't afford to stay, can't afford to leave. This pattern repeats across hundreds of thousands of Florida families simultaneously. They bought believing Florida real estate always appreciates. Instead, they discovered Florida real estate can devastate wealth faster than any market crash in memory. The psychological impact is crushing. These families did everything right, believed in the American dream, and got financially destroyed. The equity trap creates desperation selling. Families tap retirement accounts to cover losses just to escape. They accept bankruptcy rather than stay trapped. They walk away from homes and accept destroyed credit for 7 years. Because staying means losing even more. The exodus isn't people leaving paradise for better weather elsewhere. It's families fleeing financial catastrophe before they lose everything. They're abandoning Florida not because they want to, but because staying guarantees continued wealth destruction they can't survive. Florida's housing market isn't cooling. It's collapsing under the weight of costs that destroy middle-class prosperity completely. In conclusion, nearly 1 million people preparing to flee Florida in 2025 represents more than population loss. It reveals a state where the middle-class dream has died completely. We've examined 10 brutal reasons driving exodus: insurance apocalypse, condo crisis, property tax explosion, HOA fee catastrophe, affordability collapse, climate reality, remote work reversal, investor retreat, employment exodus, and the equity trap that's devastating families who believed homeownership built wealth. The pattern repeats across every reason: costs rising exponentially while values decline or stagnate, creating financial devastation that's forcing families to abandon Florida regardless of job security, family ties, or personal preference. When teachers earning $51,000 and nurses making $68,000 can't afford to live in the communities they serve, when six-figure household incomes mean financial panic instead of security, when insurance alone consumes 15% of gross income before mortgages even begin, the system isn't struggling, it's broken beyond repair. Florida's housing model has collapsed. You can't sustain middle-class homeownership when total housing costs consume 50 to 75% of household income. You can't build generational wealth when homeowners lose their entire life savings in 3 years while watching equity evaporate monthly. You can't create economic stability when essential workers are priced out of the communities depending on their labor. The insurance crisis alone makes Florida uninsurable at middle-class price points. When Citizens Property Insurance faces $17 billion in exposure with $6 billion in reserves, the next major hurricane triggers state-backed insurer insolvency, leaving policyholders discovering their insurance can't actually cover claims. That's not a housing market. It's a financial time bomb, destroying anyone still trapped inside. The wealth destruction is staggering and accelerating. Families are losing $50,000, $80,000, $120,000 plus in equity while spending $4,000 to $5,000 monthly maintaining assets declining in value. They've done everything right, saved for down payments, maintained good credit, worked stable careers, and they're being financially devastated by a cost structure that's risen 100 to 200% across insurance, property taxes, and HOA fees simultaneously while wages stagnated. The exodus will accelerate through 2025 and beyond. Every family that escapes tells their story to friends, relatives, and co-workers considering Florida moves, warning them about the financial catastrophe hiding behind sunshine marketing. Word spreads that Florida's paradise promise is a trap, and the migration wave that fueled Florida's boom reverses into an exodus that devastates property values for those remaining. Please hit subscribe to uncover the cities as we continue exposing housing crises that mainstream media ignores. Share this with anyone considering Florida relocation. They deserve to understand the financial devastation they're walking into before they lose their life savings. Watch our investigation into Texas housing, where different problems create similar wealth destruction. Also, drop comments below with your Florida exodus stories. We're documenting this crisis as families flee in real time. Florida's middle-class dream didn't fade gradually. It collapsed catastrophically in just 3 years, and the exodus of nearly 1 million people in 2025 represents families who recognized financial reality before they lost absolutely everything.